the show was the fact that with the fact that oil prices are going through the roof, that's going to cause more inflation. It's going to cause the Fed to do stuff, and then it's going to cause potentially a recession. Do you see any of that yourself?
Well, yeah. I mean, I was out at the coast this weekend, and gas over in Paso Robles was it $5.79 a gallon? I mean, I know that's a little more inflated because
I filled up diesel this week at $5.
Yeah,
in town.
Yeah, that's crazy.
I think it was $5.15. Someone asked me, we're gonna see close to $8 a gallon. Go ahead.
Well, I'm gonna say, it's crazy when you're filling up your tank and all of a sudden it stops at $90. You're like, why did it stop? Well, that's just the limit,
Well, mine went to 125, and I still only put 21 gallons in.
Oh yeah.
Yeah. On a 31-gallon tank, it's kind of gets expensive now, and it's not like I drive a lot. But what I wanted to kind of go over is, I always say, voting has consequences. Know what you're voting for. Vote policies, not personalities.
Yeah.
Get out to vote. I do it on the radio show. I do it everywhere, and it means more now than ever, because this administration, and I'm not going to try to get too political right now, but it seems like instead of just opening up our reserves and going back to almost 20,000 barrels a day to make up the difference, which is real easy to do, they keep telling us that we can't do that. And we're going to do everything, but that's not the right thing. Well, I don't know what the right thing is, but it just seems what I've seen. But anyway, so with the way it's going now, if we get to $200 a barrel, sorry, I stopped shaking the actual table.
It's okay. It's earthquake, man.
Yeah. If we get to, they're saying $200 a barrel this month, if things don't change, that is definitely inflationary. We are going to see a reaction from the Fed. So the Fed has taken too long to react to what's going on. All right. So now they got to overreact. And that's why everybody was so on the Fed. Everybody except for the Fed was saying, go ahead and raise, please raise, please raise, please raise early. Do it earlier, do a quarter, then do another quarter, whatever. And now they haven't even done anything. They're going to meet and supposedly do a quarter. Well, they need to do they should have been at 3 quarters already to slow this down, what we're going through. So that didn't happen. So what I kind of want to go over is I want to show the recessions that we've been through since the 60s, and then show how that has affected housing, because everybody thinks about 2006 and how that bubble is going to happen again. And if you're okay, I want to show this.
Oh yeah.
Yeah. I want to kind of,
hey, people like graphs.
Yeah. So, all right. So I'm going to go over to the chart over here. So can you see, is that big enough? I sure hope so. All right. So if you look right here, this is where and I'm looking at another screen, of course. Right. So see all my stuff on there. All right. So let me see, can I get a little bit bigger? Not a little bit bigger. All right. So right here's the 1960s. This is a recession in 1960 right here. It says right here, index and the recession. All right. So this is the graph of how housing has happened over time. So if you look in the 1960s, we had a recession. We went down a hair, and then we came out of it. We hit in the 70s with the oil that happened and the gas issues. We went in a recession, and real estate went flat. We kept going through into the 70s. There's 2 recessions in the 70s. You see that?
Yeah.
Yeah. So, and then see the housing. And then after we came out of that last one, housing started taking off. And guess what? We're still like, can you believe housing took off? And one of the reasons is during this period of time, what were interest rates?
Oh, gosh, weren't they in the double digits?
Yeah, the 21%. And yeah, the highest rate in 1983 was like in October was like 21%. It was ridiculous.
Yikes.
So
that is crazy.
So what does that say? So when rates go up, housing's values go up also, right? During the recession, usually what happens in a recession, the slowdown in the interest rates drop, and that's what happens. But we know in the 80s here, and look at that, they had 2 back-to-back recessions, 80 and right there. That's horrible, right? So if you follow this line, now we're getting into the 90s. There was a slight recession in the 90s. How I knew this is I was in real estate at that time. I just got out of the Navy. I got into real estate, and you couldn't sell anything. Yeah. Nobody was buying. So that recession, then that went away. And then look, boom, we started taking off. And that's 2002 right here. And we had a little recession, didn't do anything. And then we do off to the races with values of homes. During this period of time here, we had loan programs that allowed people to buy homes that as long as you had a pulse, you could buy. And that's what happened during that period of time. But also during that period of time, it's the stuff I talk about all the time, that we overbuilt homes. We built more homes than we needed during that period of time because of that whole Roe versus Wade and how birth rates plummeted 31 years prior. And that's another episode. Go back to our other episodes. But basically, you see here. So this is where this recession. So that took us into the recession, the programs we had during that period of time. That's what happened. And then you see we went down, and then what's this, about 2012, we start seeing it starts going up. And look at this. Did you know in 2020 we hit a little recession? Yeah, we were all at home and everything, but that was a recession. What happened during that recession? Woo, house values went up. So what I'm trying to get at is, if we're going to another recession, what typically happens is rates drop, right? 2020, what happened with rates? They went through the floor.
Yeah.
In this period of time, compared to where these rates dropped in this period of time. This is actually during this period of time right in here. The government came out and said, okay, we're going to allow FHA to go up to 699 or 599 loan amounts, right? And they were doing almost jumbo at that time, because that's what it seemed like. High balance was FHA to get people to buy houses. And that's what they did. And so rates dropped. But so what I'm trying to get at is that this next recession, if we have one right in here where we're at, because of oil, because of all the inflation that comes and hits us, we're going to eventually go into a recession. I don't know how long it's going to be, but what typically happens from that is interest rates will drop, and then that will make housing go up even higher. So this bubble that everybody keeps thinking about, keep thinking, because it ain't happening.
Yeah.
But and if you look at this chart, I mean, people always say, how can values go higher? Well, I'm sure back in the 60s, they said the same thing, right?
Yeah.
Right. The average person made, what, 1,000, hardly anything. House values were 5,000 and that kind of stuff, and 10,000 and 15,000 to buy homes. In the 80s, right in here, Roseburg, my parents bought on Roseburg 428 Roseburg for 80,000, right, in this period of time. I don't know what it's worth today, but I'm just saying. So that's, values continue to rise, and we went up here because of the whatever you want to call it, values were there. If we wouldn't have had those programs, it would have continued on.
So now, question: this graph, did it just go back to 1960, or did you clip it at this? I'm just wondering.
I just went to 1960 because that's basically what we've been watching for recessions. Because prior to that, you have to go back to 1942, which was the Great Recession. Problem back then is they didn't have the loan programs. So they came out in 1942 after the war, and most of the time prior to the Great Depression, you only were allowed to borrow for a short period of time to buy your house. And you had, everybody saw It's a Wonderful Life, and you had those savings and loans, and so borrowed, and they would build their house. They didn't have all the programs that we have today. So they came out with the HUD and FHA, and came out with the loan program at FHA at that time. And that's how the whole thing changed from here going back. But if you look, we're kind of originally, if you look at interest rates, that's kind of where we are in the 60s right now. I know the graph up here is showing the houses, but interest rate wise, this is kind of what's happening with us right now.
Yeah. So
they were low, right? And then recession, and then they went lower, but you can't see it here. And then, then they went up because of inflation in this period of time. This is 1968. That's when the war happened. What they were saying with our last election, it was almost identical to 1968 because everybody hated Nixon. Right. And then Carter got in, and then he had the war kind of thing. Same thing like Afghanistan. They had the Contras, the same thing. Then other stuff, then Iran, and, all this kind of stuff that happened with oil embargo. Right. And then all of a sudden people were standing in line for gas. And if you had odd at the last part of your digits of your license plate, you could actually get it today. The other person evens tomorrow, kind of how we water. And that's how it was. It was crazy during that period of time. Yeah.
No kidding.
Yeah. History. Don't get rid of history, because otherwise we'll repeat it.
Yeah.
So all I'm trying to say is, don't fear the Reaper, which is inflation is coming. The whole recession is coming potentially from it. We don't know for a fact. It just depends on what the Fed does. And right now we don't know what the Fed's going to do, because they haven't really done much to this point. So are they going to, if they don't overreact, we could be okay, right? It's so funny because I typed some stuff before, and it's like there was a ton of bad loans. If you could fog up a mirror, no income, no assets, you could buy.
That's a good way of putting it.
Yeah, and so I mean, we had some program. Holy cow! I mean, this week with rates, mortgage-backed securities are taking in the chin all week. So, yeah.
Well, I'll trust you. You're the expert on that.
No, I'm just saying. Before you know, we're going to be conventional in the 5s.
Yeah.
And still, affordability was what the problem is going to be going forward. What I mean by that is, if you're can afford it at 4.5%, can you afford it at 5%? Can you afford that property at 4.875, or do you fall off? And that's what's going to happen. You really need to know how much you need to make to be able to own a home, and that's the first thing you need to do. Right. Get somebody with myself who can help you figure that out, and then figure out, okay, you're here today. What if interest rates go up another half while you're shopping? Because as you talked about our one on Tuesday, how long it takes sometimes to get into contract.
Yeah.
And we're going to see this.
It can take months, which obviously rates can change dramatically in that time.
We've seen rates in the last few weeks drastically change. Doesn't mean they're going to stay here forever. Doesn't mean it's going to, but we don't know what's going on with this administration and the oil stuff and everything that's going on. Yes, we all are good with not buying Russian oil, but how do we replace it? Do we go to Venezuela and give that warlord more, $600 million a day, or do we go to Iran and give them $600 million a day so that they can come after us and all that kind of stuff? And I'm just saying we have to be careful with what we're doing and not make it about only we got to do the whatever that is, the Green New Deal. You have to do what's best for America, not what's best for administration. And that's what we need back. We need to get back to that.
Well, see, if guys like you and I can sit here and spitball on how to fix the economy and how to make things better, obviously the people running the country know how to do that as well.
They know how to do it. It's just a question of why don't they do it?
It always feels like it's intentional self-destruction. I mean, if we were producing our oil again here, we could starve out all these countries, because
we are producing, but we're only doing 11,000 barrels a day versus 19,000 at the peak. If you look at the stuff, I had to do it for another show for the radio. We were doing almost 20,000 barrels a day the first year that Biden went in. Then he signed that thing, got rid of the pipeline, and then they changed it, started buying elsewhere. We can produce more. They just have to allow us. And I need to double check on that, because they were stated in the conference earlier this week that we can do it right now. You can go ahead and produce more oil. They're just not doing it. And that's the problem. They're trying to blame the oil people in this, that it's their fault, and the gas prices are gouging and this and that. It's like, no, this is what happens. And that's what happens. You have each side does their own thing. I'm tired of it. Let's get in the middle. I'll get together and make this work and fix this real easy. And that's all I'm going to say, because I'm already went too political today.
That's okay.
I'll leave it for the radio show.
It's all connected. It's all
just please get out of our way and let us, get back to doing what we do best. Because this is the only thing I can see from what's going on here is going to get really bad. It will slow down if we hit we will hit a recession. But until we hit that recession, what's going to happen with interest rates? What's going to happen with this? What's going to happen with people buying homes? Yes, we don't have enough homes. It could slow down the process a little bit. Wouldn't be a bad thing, but we're going to be at 6% interest rates before you know it, or 7%.
Yeah.
I mean, we're going to be at $8 a gallon gas before you know it. So
that's gonna hurt guys like me, man.
It's gonna hurt everybody.
I mean,
the people it hurts are the middle class and lower echelon, I'd say, underneath that, because you don't have a lot of money, and that's people commuting. I was listening when I did a radio show the other day. They were talking about how they don't make it up. They make the same. They're not making any more money, but they got to pay more in fuel costs, right?
Well, I mean, not to sit over here and cry, but as realtors, especially like when you're driving around with buyers, I've put on 1,500 miles in the last month. Just in between Turlock, Escalon, Ripon, Modesto.
Time to get one of those little electric cars.
Oh, I just can't do it.
Well, okay. Well, last thing about electric, they're pushing us to go electric, right?
Yeah.
The California grid can't even handle us in the summertime for air conditioning.
I know.
And they
It's
told
silly.
everybody last year, don't plug in your electric car. All right, let's take the steps at a time, please. Right. Let's do this. And then when we get to this, we now at that point cut it back. Not like we're going to this and we cut everything, but we can't do anything. Anyway, move on. All right. Thanks for being here. And thanks for letting me get political.
No, I appreciate it, Ed.
All right. Have a good day.
You too.
And thanks for watching. If you like what we do here, follow, subscribe. And I don't mean to close on that, but thanks for everybody for you out there who do watch.